Hey y'all, Daniel Castillo here with Dixon Pacifica Real Estate. Today I'm meeting with my friend Chris Larsen, who is a real estate investor. He's done actually all of the spectrums, right? You've done some residential, some multi-units, and also some commercial.
Yep.
And I've been getting questions out there from people in relation to investments, and I figured that we talk a little bit about getting started in real estate investing. And one of the main things that people talk about are cash flow and what it means to have a cash flow in business. And you have a few different takes as to what to look for within, let's talk about as if this was somebody's first home, right? So what advice do you have for people out there, that they're thinking about getting into real estate investments? What should they be thinking about or looking at?
Sure. So in a nutshell, a cash flow property is a property that you're netting a cash flow, positive cash return, after all your expenses are accounted for. So we're talking about your mortgage,
Okay.
we're talking about your insurance, we're talking about any maintenance, and the whole spectrum needs to be accounted for.
So once all of that is accounted
Right.
for, by the end of the year, the money that's left over, that's your cash flow,
That's correct.
right?
That's correct.
And then when you're looking at a property, you had mentioned in a conversation that we had earlier is a rule of thumb is the 1% rule.
Yeah.
Right?
Yeah, I like the 1% rule, Daniel, because it's basically 1% of the purchase price. If you can net 1% of the purchase price as rent per month, like a $200,000 house, if you can get $200,000 house, yeah, 2,000 would be. If you can get $2,000 a month on that property for rent, then that's probably going to be a good investment.
Got it. And so let's talk a little bit about what it means to have a cash-on-cash return,
Sure.
and what somebody should be looking for there.
Absolutely. So a cash-on-cash return is if you invest, say, $10,000 and you got $1,000 back.
That would be
after
your down
all
payment,
yeah,
right?
Yeah, so let's say you put $10,000 down on a property, which would be a low down payment. But if you put $10,000 down on a property and you were receiving $1,000 a month after all your expenses, that'd be a 10% cash-on-cash return.
And what would be a realistic return that somebody should be looking for? So when they're gauging these things out, because some people don't know what a solid return is,
Sure.
right? So what type of returns did you look for when you first got started?
Yeah, so when I got started, I was looking for returns north of 15%. I still do.
Okay.
So 15, 20, 25%, as far as total returns are concerned.
Sure.
Cash on cash returns, I think 5 to 10% is pretty reasonable, but you can't always count on appreciation. You want to
Sure.
make sure that you're paying all your bills and you have that cash flow property, so you know that if times get tough, if the market stalls or goes down like we saw 10 years ago, then you can hold that property. And that's another good point. If you want to scale your business, you need to also have a property management team in place and make sure that you're accounting for that as well. So mortgage is an expense, insurance is an expense, property management is an expense, maintenance reserve is an expense as well.
Sure.
And then also having a little bit set aside in case you have vacancy during the year. So those are all things that need to be accounted for.
After all those expenses are
Yeah.
done, the money that's left over, that's going to be your cash flow, that's going to be your return. And if you can make 5 to 10% of your down payment back per year, right? After all of that is paid,
Right.
you'd say you have a pretty good investment?
I'd say that's a reasonable expectation. I do.
Okay, cool. So if people wanted to reach out to you and ask more questions about what we just talked about in a little bit more detail, what would be a good way for them to reach out to you?
Yeah, so they can reach out in the comments section and ask questions. I can be reached at C Larsen, C for Chris, Larsen, Larsen, at CannellCapitalPartners.com. And I'm happy to reach out and set up a phone call and answer any questions that people might have.
Awesome. Well, like you mentioned, let us know if you had any questions in the comments. We'll be going through them, answering them there. It's also a great way for us to be able to connect with you directly and be able to address those questions personally. And if you found this valuable, go ahead and like it, share it with your friends, and let us know what you thought. Thanks.